back to my YouTube channel. I'm glad to be here again to share to you about what key learning points that I got in second class or sessions in corporate finance class that facilitated by Prof. Roy Stamble at IPMI International Business School. Okay, we start with capital budgeting. Capital budgeting is planning process for investment in long-term assets. In capital budgeting, we estimate expected future cash flow. And regarding to the cash flow, there are some type of cash flow. There are initial outlay, operating cash flow, and terminal cash flow. And then evaluate the project based on capital budgeting evaluation criteria. In capital budgeting, have some methods, and they are: first, payback period is how long the investment will be returned. This method doesn't consider all cash flow, time value of money, and doesn't require rate of return. The second method is NPV. The third one, profitability index, and the last one, IRR. For those three methods, consider all cash flow, time value of money, and require rate of return. The next step is decide whether or which project is good or bad. Do some methods have their own rules? First, payback period, the fastest payback. And for NPV, accept the project if NPV more or equal than 0. And for PI, profitability index, we accept if PI more than or equal to 1. And the last one, IRR, we accept if IRR more or equal than required rate of return. Okay, the second one, I learned about security analysis. In security analysis, we have a framework of analysis. There are domestic and global economic analysis, industry analysis, and company analysis. Besides that analysis, we still have fundamental indicators, which are intrinsic value and market price. We can decide if intrinsic value more than market price value, so we can buy it. If intrinsic value less than market price, we can sell or short sell. The last one, if intrinsic value equal with market price, so hold it. Okay, this is the last point that I learned in the class. Analyzing financial statement. There are 5 groupings in financial statement analysis. First, profitability, we talk about return. Example, return of asset and return on equity. The second one about liquidity. We talk about risk, example, current ratio. And the third one, activity, about return, example, total asset turnover. And the next one, leverage, about risk, example, debt to equity ratio. And the last one, market ratio, about risk, example, dividend yield. Okay, everyone, that's all that I would like to share to you. Please like and don't forget to subscribe my YouTube channel, and see you soon in the next sessions. Bye bye.